If you're at an investment grade quality and you're being held in a retirement plan of some sort or a Wall Street product of some sort, if you get lowered to junk bond status, interest rates, principal, okay? If they are, when you get downgraded to junk bond, interest rates go up. When interest rates go up, the principal value of the bond goes down. So frankly, you might notice that, right? Conversely, if you're holding the individual bond, I mean, you can watch the principal evaporate. But all of those entities that can only by prospectus, by contract, hold investment quality bonds, they would also be forced to sell. If they're forced to sell, that's going to drive interest rates up and the principal down. So it's critical, the earnings, that's pretty simple. I mean, you have earnings, can you pay your bills? So it's the same kind of thing. But junk versus graded, there are tremendous implications. And what we've watched is the growth of the triple B, that area that's just above investment grade, grow from about 19% to over 50% of the investment grade market, because the grading services don't want to downgrade those bonds. Because remember, everything is so incestuously interconnected. And what I haven't talked to you about, we've talked about interfund lending. We've talked about that before. And interfund lending means that the SEC has allowed mutual fund families, ETF families, to borrow. So if you've got a money market in the same fund family as a high risk junk bond fund, right? And there is a rush to liquidate, well, they can borrow from your money market funds. So here you think you're doing something safer, but in reality you're not. So these funds are as risky as the riskiest fund in that family. Once COVID hit, then the SEC expanded who could use this and how much they could use. So you don't even realize it. You're in an index fund, you're in whatever you're in, and what you don't realize is behind the scenes, these fund families can be borrowing all over the place, and even the ones that haven't been approved are now approved. I can't tell you how quickly that's going to change, but you can buy less and less with the same dollars. So primarily that, and if you've accumulated it in a bail-in scenario, will they honor their deposit insurance scheme? That's their word, not my word, although I agree with it. Probably, because remember, they tested that in Cyprus and everybody went up in arms, but what about, deposit insurance? What about deposit insurance? However, your accessibility to it, of course, part of the drive, and I'm kind of thinking out loud here, because part of the drive in Cyprus and Greece and other places that had happened was to get people more into the digital realm. So that could also be applicable here. But could it be bailed in? 100% it could be bailed in. They've changed and eliminated and reduced the impact of so many of those laws that were written into Dodd-Frank, consumer protections, so except that one. That one's still a good law. Isn't that great? But it is primarily from the loss of purchasing power. If you could get it in a lump sum, you might want to consider doing that. You got to do what you're comfortable with. But for me, and especially, I don't like AIG's track record. They had to change the name because they don't want you to relate it back to all of the derivative bets and the funny business that they were doing. And maybe they're not doing it anymore. But see, the problem with insurance companies, when you read these documentations, particularly those with a fixed benefit, a promised guaranteed benefit, is that they have to earn enough to cover that benefit and then some, because they're not going to do it for free. And so they've taken on a lot more risk because of this interest rate environment than they normally would. And that puts insurance companies at huge risk, and therefore any of the contracts that you hold in them at huge risk. Well, I don't think that once they implement the CBDCs, that is actually going to be the end of this hyperinflation game. I think that they will use that to, number one, get people addicted to it and used to it, but I think the hyperinflation will continue. The ultimate reset is done in one way. That's the way it's been done forever, and that is against gold. So you will see gold extend to its fundamental value. One of the things my Uncle Al taught me, and I've seen it, that now that I've had a long enough lifetime to see it, is when you're working with tangible assets, the pattern is from undervaluation to fair valuation to overvaluation to fair valuation to undervaluation in an infinity loop constantly. Okay. Right now, we are definitely in undervaluation. We're not even marginally near fair valuation. But in a true reset scenario, when all confidence is lost, you take something that has no tangible value. I mean, the US dollar is used in the financial system, one place. I've had so many people say, well, you can't eat gold, you can't eat silver. Well, you're going to eat paper dollars? No. You're going to be able to eat digital dollars? No. You have a better chance of eating paper than you will digital because they're just on a computer. But what you can do with silver for barterability is you can convert this into something that you can eat. It's pretty simple. You can convert this into something that you can eat. So, now there are and I want to make this clear because you guys see me refer to jewelry all the time, but it's a very expensive way to work in this market. However, if I needed to take this ring off and use it, I could. It's the right tool for the right job, though. I don't go out and buy gold or jewelry with the explicit intention of converting that into something. I just have that as a complete backup. For me, I do it this way. This is the most efficient way to do it, is in coin form. And there are, again, different quality levels depending upon what your goals are. So before you make any choices, any of your choices need to be well educated. But let's face it, in jewelry, you got about a 300% markup. That's a pretty big markup. So would I use it if I needed to? 100%, absolutely. But that would be if I had to go through this. I don't think I'm going to have to because I continue to accumulate because you can't have enough going into the reset.